This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, we've packed a number of shows together to give you some highlights. I know you're going to enjoy the show. Thank you for being with us today. Our guest is Nick Ameluxen. Thanks for being on the show, Nick.
Yeah, thanks for having me.
And Nick spent a decade in the automotive industry as a technician before transitioning to real estate. He invests in single family, turnkey, and multifamily in multiple markets. He's a real estate coach, host of the Austin chapter of the South Texas Multifamily and More Meetup, and is a partner and asset manager at Quantum Capital. Nick, welcome to the show. Give us a little bit about your focus in real estate and syndication business right now, and let's jump into some of your expertise.
Yeah, we focus, value add properties, B and C class, and two of our main markets are Los Angeles and Austin. I got started with my partner Mark. We met at the end of 2018, I believe, somewhere around that time, and kind of just took off from there and scaled up pretty quickly in Austin. And now we're expanding a little bit south of Austin, but that's kind of our main focus.
Nice. I'll back up a little bit and tell me a little bit about, you were a technician and you decided to get in the real estate industry. Why, for one? And then tell me a little bit about that transition.
Yeah, I actually loved being a technician. I thought it was a really fun job. I was really good at it, paid very well for what I did. But, at the end of the day, it was very physical work, and you reach a cap really quickly on what you can earn and achieve. And as I reached that, and, I also started having kids, so that kind of changes your mindset as well, was just looking for ways to kind of diversify where my income was coming in. And, after failing at a few other paths, I kind of landed in real estate. It's always been kind of an interest of mine. I bought at a great time in a great market. So that kind of showed me early on the benefits of real estate investing. And then, as my wife and I got more and more into it, it became really fun and interesting. And I thought, how can I make a career out of this? How can I do this full time? And, through that, that's kind of how we transitioned to multifamily when I, understood the scale and the business aspect of it.
Give me just one or two key things that helped you to go from the W-2 to full-time, commercial real estate.
I mean, treating it as a job, I think, is a big part, especially if you're trying to make a business out of it. So having that mindset where, it doesn't matter if I don't want to do something today, it has to get done. It's easy to kind of glorify the investment and real estate process, but a lot of it is tough, hard work. It's, late night and deadlines. And I think going in with that mindset helps. I've always been, I get my work ethic from my parents. So I think that's helped a lot. And then patience, being patient and willing to do a lot of work on the front end for a reward down the road.
I think that's very well said. You have to be patient. You have to be willing to work hard. You have to be able to see the bigger picture. That's way, much further out. It's not today. It's not happening tomorrow. But again, the listeners hear me say this all the time. It's those small, consistent actions over a long period of time that lead to bigger things. So appreciate just those words of wisdom. What about, you mentioned, like finding your partner and tell me a little about how did that, affect your business? How did maybe shed some light in how did you know he's the right partner and what did that do for your business? And how did you know he's the right fit?
Yeah, well, starting out, I was a technician in Austin, so it's not like I had a lot of capital or a huge network, right? But I was in a very competitive and high-priced market. So early on, I knew I had to find individuals with both experience and, a network and liquidity to help me do the size of deals I was looking to do. So as I was networking, I paid special attention to people who had experience and brought all of that to the table. So, as far as what they could offer, that was the main focus when I was looking for that. And through that, I found a lot of people who, out of our state, but interested in our market, very typical for Austin, who were looking to invest, and just found a partner where we just kind of clicked. Our philosophies were the same. What we were looking to achieve were very similar. I had an abundance what he was lacking, which was time and being boots on the ground, and he, made up for a lot of my deficiencies. So it worked out really well. As far as, how did we decide to be partners? It was kind of an organic process. We started looking at I was looking at deals, and as I was finding interesting ones, I would, kind of approach them and see if this is something he was interested in. We didn't start out as a partnership looking for deals together. It was, as I'm going through the process, finding opportunities is when I would kind of approach, because that was the value I could add, right? Is finding good things to invest in. developed over
Yeah,
time.
I like thinking through, partnerships a little bit when somebody, like yourself has done that. I mean, I did the same thing, and it was finding that individual where we aligned on so many things. However, one thing that was very different was just a complementary skill sets. Right. Different things that we brought to the table, which was so important to our, just success or moving very fast and strategically. So tell us a little about, your first syndication and how you got to that deal. What were some key things that made that happen? Was it the partnership? Was it things you've been working on before? Was it, something you were even doing while you're working full time? How did that work?
Yeah. The first deal came about just after a lot of searching. At that point, I had started to develop pretty good relationships with the brokers out here. It came pretty quickly across my desk, and it looked very interesting. So luckily, I was able. This is when I was still working full time, but I was able to get out there very quickly. Get our offer turned in before it hit the market. So I think that gave us a little bit of an advantage. And then, yeah, leveraging a partner like Mark, who's my partner, his experience and track record when you're starting out certainly helps you get your offers taken seriously instead of just being a newbie with really nobody behind you to kind of back you up.
Tell me how you approached that a little bit. Like with that broker conversation, how did you express that track record and experience, even though it was somebody else's?
Well, sure. At this point, we had offered on a bunch of properties together, so it was, they've kind of started to know who's with me and who's not. I like to use the royal we a lot when I'm talking with brokers, just because I'm kind of leveraging, no matter what, I would have had, somebody with experience and capital behind me. But at that point, I knew it was Mark, and just kind of expressing it as our track record, as quantum capital, and not here's my partner Mark's track record and here's mine. It's, we're quantum capital, because that's how we came into that deal. So it just made it easier, I guess.
No, that's awesome. I know, and most have done that or do that, you got to have experience on your team. And getting started, nobody had experience, right, on the first deal that they did. And so you have to bring experience one way or the other, whether it's your property management or partner or someone, right? And so that's extremely helpful. So can you share anything about the deal, the size it was, or any struggles that you all had getting that deal to the closing table, being that first one for you?
Yeah. So one thing that we did, it's a 53 unit in Austin. It ended up being about 7 million all in. I think the biggest struggle was just not really having all of our team members in place as we went under contract. Even though we kind of been offering, we knew kind of who was there when it got time to hit the ground running. A lot of like inspectors and things like that kind of fell through, and we had a short due diligence time just to be competitive in the market. So that was kind of the biggest hurdle. And, at this time I was still working at W2, so it's not like I could drop everything and focus on this. But at the same time, we had a lot of capital tied up. So that was a very stressful 17 days. I swore after that I'd never do a due diligence period that short again. And then I think on the next deal we did it short as well. But at that point we had our team and everybody in place. It was a lot easier. But that was pretty much.
So you learned a lot, right?
Yeah, learned a lot. Yeah.
Yeah, you learned a lot, especially about that team and having those people in place. So what was different on the next one? Did you just confirm? I mean, what did you lack on the first one, and what was different on the next one that made that much more smooth?
Yeah, I mean, just your go-tos when it comes time for, all of your third parties, your getting your engineering reports, your unit walkthroughs, all that done. For the first deal, we had who we wanted to use, and then that fell through. And then it was like, okay, what do we do now? Now we're scrambling, trying to find backups. At this point, we had a team that had been tested. We conferred with them ahead of time, which is something we didn't do on the first deal. So we had everybody lined up. So when we signed the contract, it was, the next day we were out there on the property.
Yeah. Wow. No, that is awesome. Tell me about, how did you all raise the money for that deal?
So that one was actually just a joint venture from my partner and myself. So we had the capital ready to go.
Nice. Yeah. Okay. And so what about moving forward now? How are you all, raising money now from investors, or, how's that growing?
Good. We're actually, we were supposed to close yesterday on a deal. There's this freak snowstorm out in Texas, so it's been delayed a week. But, we took a bit of a break in 2020 just to kind of see where things were landing. And then as we started back up in June, Austin's just been on a tear. So it's been a very competitive market, but we finally found a deal that kind of met what we were looking for. Funnily enough, it had actually been brought to us in December of 2019 and then fell off and came back. But, we're set to close on that soon. And, the capital raise went smooth. There's a lot of investor interest out there right now.
Awesome. Well, tell me a little about, you said you took a break in 2020. Tell me about your thoughts behind that and what you learned.
Yeah, in retrospect, I don't know if I would have made a different decision, but it would have, I think we were probably safe to continue, buying. It's just so much was happening.
Right.
Lending requirements were getting tighter, occupancy levels in Austin, at least. And I feel like most major urban areas were falling, rents were softening, but prices, there's no fluctuation in prices. If anything, they were going the opposite way. And, part of our pausing was just kind of assessing, where we're at and trying to figure out where we go from here because, we're also, fiduciaries of people's money. So on the front end, we don't want to make bad deals, and not knowing kind of where the market is a good way to overpay. And then also we're, big investors in our deals as well, because that's why we do it. We like to buy property and we bring people along with us. And so if we're not comfortable, it's hard for us to, feel confident bringing other people into a deal as well.
Of course. No, that's very respectful. No doubt about it. Tell us a little bit about managing your time, family, those things while working full time and getting to that first large deal and making that happen. But, you talk about how stressful that the due diligence, all that stuff was, but, getting up to that point, there's a lot of work that's already gone in, before that even happens. And most, especially while working full time and growing family, it's difficult, right? I know it was for me. How did you do that and manage all that?
Yeah, you really got to take advantage of any downtime you have, especially when you're working a W-2. Now, luckily, I was in a career where, and at a level in my career where I had a lot of, weight and expertise, so I could kind of throw that around and take breaks when I needed to hop on calls. But also, a lot of my time was my own, and so that prepared me for not being a W-2. But having that kind of compensation structure, it was more of a production versus you need to punch a time clock. And so as long as I was getting the work done, it worked out. So there were definitely some long nights at work, making up for some short days, coming up where I knew I had to, go on a tour at 12 in the afternoon, and it was going to take an hour and a half. And so I couldn't take a lunch that long. I think family was the hardest part, kind of balancing that, but also, coming home and having a bunch of deals to underwrite and emails to follow up on, and just had some late nights. I mean, at the end, you just got to do what you got to do.
Just have to do what you got to do. And before we started recording, Nick, you said whatever it takes to get a great deal done, right? That's you kind of said your all's focus. And do you have an example or two of that? Just because I like that mindset. I just like the mindset. You just have to keep pushing. Just that never give up mentality that I talk about. So any example of that? Where you just had to do whatever it takes, or maybe we were at that time talking about JVing versus syndication, and you all were going to look at each deal. And figure out what the best option is, right? How have you all done that, or maybe give us some examples so we can, think like that too.
Yeah. I mean, I guess, to do whatever it takes in Austin, and probably in every market, you got to move quick, especially on a good deal. They go fast. So I guess just referencing the first deal, I got the email that morning. I ended up having to take a very long lunch to go tour the property that afternoon. I took the next day to submit our offer once again during lunch. And then I ended up having to work, all weekend to make up for that time. And then the 17-day due diligence period, it was a lot of, waking up to get to work at 6 instead of 7:30. So I could leave at 3 so I could complete what I needed to complete, and then you're up till 1 a.m. I don't know if there's one solid example in there of where it was doing whatever it takes. It's more of a long-term grind in that respect. When it comes, it's kind of the same with deals, right? If you're getting into a deal and you have capital raise or you're underwriting and it seems like, maybe this doesn't work in syndication, but you still like the long-term prospects of the property, you just keep exhausting, I guess, all options until it's just, you're out. But most of the time you don't end up at the out of options if you're doing your job correctly. There's always a way to get a good deal done.
Daniel, welcome to the show. Honored to have you on. Just after reading a little bit about you, I know you're motivated. I know you're somebody that thinks big. You go tackle things that maybe most people wouldn't tackle or wouldn't attempt to tackle. So I like talking to guys like that and gals because I feel like I relate to that, and I want to go after it, right, and make big goals. I feel like you've done that. And so, give us a little bit about your focus, your business model, maybe your background. Let's talk about that.
Yeah. By the way, I love that you said, the hard runner, the motivated, and, that's something that I've actually been reflecting on recently. I have a lot of friends who are, my age, but we're all crushing it in the field of entrepreneurship. And one of the things we talk about how is all of our lives. And there's three friends I'm thinking about in particular. I have a buddy named Chris, Kevin, and a buddy named Alex. And every single one of them run probably an 8-9 figure company, so we're all kind of we're all peers, and we're all kind of going the same place, but at the same time, we're all in our late 20s. But one of the things we talked about, and you reminded me of it. So sorry if I'm going off on this wild tangent than you'd expect me to go to, but I feel like our generation, we're so enamored by the whole Gary V philosophy, right? The whole hustle 18 hours a day, you eat ramen noodles and all this stuff, boom, boom, boom. And we're talking about that's awesome and that's attractive because I think people are attracted and they fall in love with the idea of being told that they need to work harder. Because a lot of us have this narrative, right? And these concepts like imposter syndrome wouldn't exist if this narrative wasn't in our head. But there's this narrative that we feel like we're not good enough, and we feel it. Our wives feel it. Our friends feel it. Like every single human being, 90% of us at least have this narrative playing in our head that to some degree that we're not good enough. And I feel like when someone like Gary Vee gets on stage and just goes, well, you're not good enough. You have to work harder. You have to work 18 hours a day. That's what a lot of times us millennial entrepreneurs, we are attracted to. But there's another guy that not a lot of people know, a guy named Dan Kennedy, who, is one of like the big, like the godfather of marketing, right? And he was arguably one of the most successful people in business. And it's crazy that not a lot of people know who he is. But I mean, his whole philosophy is like, no, like you get as much done as you can in 8 hours because, I got to be on horses by the time it's 4 p.m. And, he talks about the idea of learning how to do in 4 hours what it takes most people 10 hours to do. And that's actually what I personally experienced when I got married. When I was dating, when I was single, I would work the 14, 15, 16 hours a day, like the whole Gary V, go get it, get after it, motivation, stay hard. Right. And then when I got married, I was worried that we were going to actually, lose revenue. I was worried about that I was going to be less productive. And I was in a position where I can only work 9 to 10 hours a day. And surprisingly, our revenue almost doubled year over year. And I was significantly more productive because I told myself, all right, I got to find what it means to get done in 7 hours, 8 hours, what it usually takes me 20, 30 hours to do. That was one of the things that led me to hire a performance coach. And not only that, but really just sit down and learn what it means to slow down, but in exchange, know that I'm going in the right direction. I think a lot of real estate entrepreneurs are running 120 miles per hour right now in the wrong direction. And I'm not talking about, just buying really bad deals during a market crash. I'm talking about in every aspect of life. So again, sorry about the tangent, but to answer your original question, Whitney, what's my business model? What's my specialty? So I've done a lot of different things in real estate. So I started a real estate fund about 4 years ago. That's a 506c. And we do lending. So we do lending that is collateralized by real estate deals. I myself still do real estate deals as well. I target 50 plus unit buildings. I'm currently going after or helping somebody acquire a 98 unit building. And, they graciously offered some GP shares to me. And then I'm going after some other, 80 something units and whatnot. But obviously, just based on today's investment landscape, I'm very selective and I'm very choosy about how I structure those deals. So on top of that, I've got a nice YouTube channel that's kind of like my hobby. We talk a lot about geopolitical finance and we talk about just fun stuff, things that I personally find very interesting. And then my brother and I have a couple of finance companies as well on the side.
Nice. No, honored to have you on. And I appreciate the tangent as well, because I think we can all relate to that, in a big way, or to some degree anyway. And I want to focus on that just a moment, because I think it's crucially important as we get married or we have kids, and just the mindset of, man, you thought that you were going to lose revenue, but it actually doubled. And I find that, man, it's, we can, you talked about, you just run almost the wrong direction. It's like running on a treadmill, right? You're not going anywhere. I want to harp on that almost just a moment, or let you, what did that look like? What changed for you? It almost takes something like that to push us to a whole nother level. So we think differently about things. So it pushes us to do things, right, that much more efficiently than maybe we would have. And so what did that look like for you, Daniel? How did you, learn to double down on things in a way, or change the way you looked at goals that were maybe really big, or tasks that would have taken, you said, 24 or 23 to 30 hours, something like that, but now you can do it in, a fraction of the time. What does that look like? How did you learn to do that? Help us to think through that.
I think first and foremost the entrepreneurial culture of today. They don't reward that, because if you think about on social media, on platforms, on public platforms, the internet, just period, we reward short-term success. And a lot of times, when people fall, we don't post about that, right? Like we don't share anything about, oh, hey, I lost half my portfolio because of this, because of that. So just people assume that speed is always better than direction. So I think a lot of entrepreneurs would be surprised how much more efficient they could personally be if they just sat down for 30 minutes a day and just said, okay, here are my 3, 4 biggest projects that I currently have that I have to do the next 7 days. For me, what are my own ideas on how I can do them better, faster, more efficient? And number 2, who are the people that have done these tasks before that can help me do it much better? And for me, that was one of my biggest cheat codes, right? And I'm all about cheat codes. I remember when I used to play video games as a kid, like I would only play if I had cheat codes. Like there would be no playing the game, it's the normal way. I'm like, no, forget that. Like give me the cheat codes. So one of my cheat codes has been developing relationships with people who have, just gone before me, mentors. And every task that I do, what I call the KPIs, right? What people call key performance indicators, I'll bring them to my mentor and I'll ask them, hey, like, is this the best thing for me to do right now at this moment in this way? And I'll just go crazy with the amount of questions I ask. So really quick story. So in January 2017, January 1st, I did what's called a New Year's resolution. We all do them, right? Like a lot of people are like, well, I want to lose 30 pounds. I want to stop watching this much TV. My New Year's resolution was I wanted 20 rental doors. That's what I wanted. I told myself, if I can get 20 doors by December 31st of 2017, I would have considered this year a massive success. And so I shared that with my mentor. He goes, that's dumb. I'm like, why? He goes, Daniel, word to the wise, right? Never set goals, always set standards and expectations. And I looked into that, and that phrase, it stuck with me. Like, I don't know why, but I just became obsessed over it. And I started reading about Olympic athletes, world-class, chefs, athlete, I mean, you name it, how for a lot of them, their standard and expectation is what gets them towards success as opposed to a goal. So I started asking myself, okay, so what are the standards and expectations I can set on myself every day, every week, every month, focused around, my tasks that produce 80% of the results? Stuff like, hey, recruiting investors, underwriting, looking for properties, developing my team, like what are these things I could do? So I spent a week just writing every single day. I just wrote down, a bunch of items, bunch of tasks that I could do that helped me gear towards success. And then through a 2-week process of sharing them with my peers, research, and bringing them to my mentors, I nailed it down to 5 things I did every day, 3 things I did every week, and 1 thing I did every single month, for a total of 9 regular action steps that I did. And I established my flag. I said, these are my standards and expectations I do every single day. So there's a lot of things that we got to do, right? The elephant is certainly a big thing to eat. So my mentor and I, whiteboard, he wrote down 20 rental doors, and we reverse engineered all the things that we had to do. Okay, so let's start at closing and let's work our way back, right? So before closing, what do I have to do? Okay, we got to do this, we got to do that. And it got to the point where it's like, okay, what is your deal finding strategy? What is your lead people seller finding strategy? And that's what we focused on. And, if you think about any other business, right? Like you have marketing and then you have sales. And it's the same thing with real estate, whether you're raising capital or you're trying to, buy a property, you have marketing and you have sales. The reason why most people are really bad at negotiating is because their marketing sucks. They don't know how to put them in the best position for the individuals to say yes. So I teach this to my coaching clients all the time, where it's just, don't focus on saying the right things so you can sell them. Focus on building the environment so that they can't say no, right? Focus on creating a situation and finding the people that are not going to say no to your product, as opposed to finding people that you can sell to. So great example of that. So my specific goal was to do 20 rental doors, but kind of an asterisk, or not an asterisk, a subtitle below that was buying them seller financing, mainly because part of my story is at 18, I had negative $187.65 in my bank account. I had 2 maxed out credit cards. And at one night I found myself trying to look for my dinner inside of a dumpster. So I didn't have the best credit. I didn't have tens of hundreds of thousands of dollars in capital saved up to buy buildings. I didn't have a massive network, So all these excuses that people come up with, well, guess what, buddy? I've gone through them myself, and probably worse situation. So I couldn't go to the bank. Like I actually told a commercial lender at one point what my DTI was and, all my financials, and they laughed at me, right? They were like, yeah, no way, kiddo. So for me, like what most people would see as a handicap, I saw it as a benefit, because most people are like, oh, like I have to buy them seller financing. I have no choice, right? I saw it as I get to buy these properties seller financing, and the mindset shift focused on what I needed to do, which was okay. And this was the reverse engineering part, right? That my mentor helped me walk through. He goes, okay, if I have to buy these 20 rental unit seller financing, let's talk about how do I create a situation where people want to buy and I don't have to sell them. So I started listing off all the benefits of seller financing, everything from, hey, like, it's an opportunity for you to defer your taxes, right? Or at least at the bare minimum, depending on what state you're in, put yourself in a lower tax bracket. Number two, it's an opportunity for you to make money like the largest entities in the world, which are the banks, right? You get to make money like the bank, make money on the interest. And on top of that, you get continuous money coming in. So I asked myself, okay, those 3, 4, 5 benefits that I drew up, who benefits most from those benefits? And this is a question that every single successful business asks, which is, who are the people that benefit the most off of my product, right? Who resonates the most with my message? And so I started thinking about it, and I started asking a lot of questions and, asking a lot of mentors. And, after about 3 or 4 days, I realized it's well-seasoned, experienced individuals who resonate the most with that message. Because, well, if they've owned the property for more than 27 and a half years, well, like, chances are that, it's paid off, right? And there's no loan that they need to pay off. And, they've depreciated the asset. There's a lot of depreciation recapture at closing. So they need to find ways to save money, to mitigate not only the ordinary income tax that they depreciate up, but also the capital gains tax. Because, well, what does real estate tend to do over a plus 27 and a half year period? It tends to appreciate, right? One of the things we love about it. So, and not only that, but, these were individuals who they were at the phase in life where they wanted their money to work for them, AKA make money as the bank off of the interest, and also, get money coming in every single month, right? These are the golden years, as they say. They want to travel. There's a certain lifestyle they want to uphold. So now the question then became, how do I find seller financing deals, all the way to how do I find seasoned landlords, right? And it became more simpler, right? So then I started thinking of ways, well, how do I attract and find seasoned landlords? So I started doing things like calling the for rent ads on the newspaper. I started doing stuff like driving around and calling the for rent signs, because again, this is a stereotype, but I know that older landlords probably aren't going to use the most technologically advanced way of marketing their property. Again, that's just an assumption that I made. And I started building relationships with property managers who are in their 50s and 60s. And sure enough, like 90% of all my leads that I talked to were landlords who were 65 and older. And that led me to some of the best deals I've done. So my KPI is my regular, action steps. One of my weekly ones was actually spend 4 hours a week driving around particular neighborhood and calling the for rent signs. I have like a 2-hour training I do on just how to do that. But just to give you an idea, that was one of my weekly action steps that I had. Is every week, it's like the 20-mile march, right? Every week, 4 hours, no matter what, I'm going to get up and I'm going to do 4 hours of calling for rent signs, every single week. Newspaper ads, I'm going to build at least one new relationship with the property manager or a banker or an attorney, somebody that might know a landlord that's 65 and older. I'm going to build a new relationship every week. That was another one of my weekly stuff.
Thank you for being with us again today. I hope that you have learned a lot from the show. Don't forget to like and subscribe. I hope you're telling your friends about the Real Estate Syndication Show and how they can also build wealth in real estate. You can also go to lifebridgecapital.com and start investing today.